Tom Piotrowski from CommSec joins us live. How do we open up today, Tom?
Well, counterintuitively, Pete, we're going to kick off with a small improvement, up by around 0.2% is what the futures are telling us at this stage. And that, as I say, is out of step with what happened in the Northern Hemisphere, where sellers were tending to get the better of stocks on both sides of the Atlantic. In Europe, they were a deal lower. The German DAX was down by 1/3%. The FTSE in London down by around 0.2%. One of the features of this week, Pete, is that we've been seeing readings on manufacturing and services activity globally as we sort of go around the world. And the most recent iterations have been measures in Europe and the United States. The measure of activity in the services and manufacturing sector in Europe contracted over the course of the last month. So not terribly surprising given the pulse of economic news in that neck of the woods. So that was a factor weighing on stocks. But there was a number of outcomes in the US that pointed to moderating activity, including services and manufacturing activity. But new home sales fell sharply last month. They were down by about 13%. They've only risen on one monthly occasion this year. Elsewhere, another important measure of manufacturing activity is a survey conducted by the Richmond Fed. It's an important measure of activity in the US. That was also substantially lower. So this all dovetails into that story of a moderating economy, but the US Fed is expected to be talking a tough game on rates, and that's what the markets are waiting for at the end of the week. So given that we saw falls in the order of around 2% for US markets in the previous session, there was a bit of consolidation today. They were largely flat. So the S&P 500 down by around 0.2%, the NASDAQ flat, and the Dow was down by about 0.5%. The big mover last night, oil prices up by almost 4%. So this turns around the most recent comments that we've heard from the Saudi oil minister, making a case that the underlying price of oil is should be higher. It's not reflected adequately in the derivative markets, and he effectively offered a veiled threat that the Saudis are prepared to pull back on production to see that relationship come back into line. It's a thinly veiled argument to try and get prices higher, but and it did. So that's one of the things to look out for today. The energy sector should do quite well.
Okay, Tom Piotrowski, thank you.